When the stock market crashes, most people panic, but somewhere, quiet billionaires are already smiling. Why does a sea of red numbers mean a flood of cash for the richest people alive? It's not magic, it's not luck, it's a math trick and a very simple playbook. Stick with me. In the next 10 minutes, you'll see exactly how crashes transfer wealth from the scared to the prepared. Let's keep this simple. Imagine a lemonade stand. You give them $1, they hand you a receipt. That receipt is a share. You now own a tiny slice of the stand. When the sun shines, lemonade flies. The stand prints money. Your receipt gets valuable. But what happens when a storm hits? Suddenly, the sky turns gray. People get nervous. They think lemons might go bad. Everyone runs to the stand. They yell, "Sell my receipt, now!" Too many sellers, not enough buyers. The price of your receipt drops to pennies. That's a market crash. It's not a broken machine, it's just a crowd losing its nerve. But here's the quiet truth. A crash doesn't erase value, it just puts it on a clearance vac. And while most people run inside, the patient ones grab a shopping cart. A crash starts with a spark. Maybe interest rates go up. Maybe a big company stumbles. The news screams. Phone screens flash red. Fear spreads faster than a rumor at lunch. A crash starts with a spark. Maybe interest rates go up. Maybe a big company stumbles. The news screams. Phone screens flash red. Fear spreads faster than a rumor at lunch. The real danger isn't the spark, it's the stampede. Regular folks need money for rent. They can't wait. They sell at the bottom. They lock in the loss. They turn paper losses into real ones. And they hand the receipts to someone else. Who's waiting with the cart? The people with dry powder, cash. Billionaires don't keep all their money in stocks. They keep it liquid, like water, ready to pour. When everyone is desperate to sell, cash becomes king. They buy the exact same companies you sold, but for pennies on the dollar. It's not illegal, it's not evil, it's discipline. They don't chase the crowd, they let the crowd chase them out. While you're checking your balance every hour, they're checking their shopping list. And the list only has one rule: buy when it hurts. Storms don't last forever, neither do panics. Eventually, people realize lemons are fine. Customers come back, and the math gets beautiful and a little scary. Remember those cheap receipts the billionaires bought? They go back to full price. But now, they own more of the sand. They didn't predict the storm, they just prepared for it. They don't just ride the wave, they buy the surfboard before it gets popular. When the market recovers, their cheap purchases explode. The stand profits. Dividends roll in. The wealth transfer is complete. 2008, 2020. Same script, different calendar. So here's the quiet truth about crashes. Crashes don't make billionaires rich. Patience does. Preparation does. You don't need $1 billion. You need a plan. Keep some cash, ignore the noise, and breathe. If this made the money world feel less scary, hit subscribe. Drop your biggest money question below. I'll answer it next time. Stay curious, stay calm. See you in the next one.